Hi, everybody. Welcome to our Friday market update. And for those of you who are watching this for the very first time, I'm sharing this with those who would like to watch and listen and learn because we are at an important time in history, I believe, because there are some decisions being made right now that could really have significant implications for investors, economies around the world that we haven't seen for the best part of nearly 100 years. So, right now, yep, we've got a lot of volatility. We saw US markets decline very sharply on Thursday. And I want you to appreciate we have two types of investors. We have a professional investor, money managers, hedge funds, investment banks, and we have the retail investor. And right now, we have a lot of retail investors panicking and selling and doing what they normally do in circumstances like this, and that is unfortunately invest with emotion and sell. And then you've got the professional investor. And the professional investor right now is just simply pricing in lower company profits at US companies in the next 12 to 18 months. A lot of retail investors like ourselves here at Trading Mastery, we are just simply continuing to sit on the great quality businesses that we own. They'll be worth meaningfully more in time. But the professional investor on Wall Street is moving money around and adjusting their portfolio and causing additional volatility because they are expecting that we are going to see significantly lower profits at US companies in the next 12 months. So this is not a market driven event. That's really important to remember. We're not talking about a global financial crisis like '08 or the dot-com bubble in 2000. We're talking about a self-inflicted event caused by the Trump administration's tariffs. So on January the 1st this year, the earnings expectation for the S&P 500, for the average company in the S&P 500, the expectation was they were going to grow their profits by 12.2%. Those expectations right now, given the level of the heavy tariffs that we have in place, the expectation is right now, those earnings expectations are being wound back to zero. So the expectation is S&P 500 companies in 2025, based on the current heavy tariffs that we see right now, are not going to grow their profits at all. So this is going to mean many small to medium-sized US companies will essentially go out of business. Earnings season that we're going to see over the course of the next 6 to 8 weeks, which will start on Monday. It starts off with the banks and then it goes into the technology sector and other industries. We're going to see all the company profits for the first 3 months of the year, which will probably be okay because that was before the tariffs. We're going to see slowing US economy, but in those first 3 months. But the bottom line is the tariffs have just been announced. But there is nothing positive that these company executives are going to talk about in the next 12 to 18 months. Nothing. Because there is just so much uncertainty with respect to their profits. 40% of S&P 500 companies get their earnings from overseas. So this is completely disruptive to any US company. And this negative economic data that we're now going to see, which is going to be weakening GDP, slower GDP growth, higher unemployment, less spending, etc. This is not going to last for a few weeks. This is going to be months and quarters. And the US is going to have a recession if the tariffs remain where they are. And that is what the market is also pricing in right now. The US dollar is arguably the world's safe haven currency, along with the Japanese yen and the Swiss franc. And ordinarily, when the stock market declines very, very sharply, we see the US dollar, the greenback, rise sharply. It weakened in the last 24 hours. And it weakened because of the fact that the US Fed is going to be forced to put interest rates down, not because inflation is coming down, but because the US economy is weakening and likely going to significantly weaken in the quarters ahead. We saw a lot of capitulation amongst investors on Wall Street and around the world through that Thursday trading session. But remember, a lot of that capitulation amongst retail investors, the first people that sell are the people that have leverage, that have margin loans, and are forced to sell. Leveraged ETFs, all these sorts of things. They are selling and aggressively selling. The average retail investor sees them selling, and of course, they just follow the herd and they sell and they panic sell. And that's not what you want to get caught up in. But that was where a lot of the big moves were. I would be surprised if we saw in the coming days ahead, in the Friday, Monday, Tuesday trading sessions next week, the sorts of declines we saw on Thursday. But what I will tell you is that any short-term rally right now is likely going to be short-lived, because this is going to play out. What we're seeing is going to play out over the next 12 to 18 months. This is not going to be a quick fix, even if Trump starts to negotiate with tariffs, because this is going to play out over the next 12 to 18 months. And there's going to be, in my view, legs lower in the coming days and weeks ahead. So just be careful with respect to believing that, oh, well, this little rally we're seeing higher maybe on Friday could be the start of a V-shaped recovery. We are not, in my view, going to see a V-shaped recovery. We're going to see a down leg, jigsaw sideways, and then a recovery. We will see a recovery, but it's going to take some time. And as I'll talk about shortly, there's some great quality businesses that will survive and endure and do really well over time. We saw over $3 trillion of wealth destroyed in the past 24 hours. Now, that, of course, is on paper, unless you sold or an investor sold. But the damage that has to the wealth effect of Americans is really, really profound. I'll give you an example. Retirees in the US that have got $1 million in a portfolio in the past 4 months have seen that portfolio decline by most likely between 10 and 20%. So that's now 850,000. So they were worth $1 million. Now they're worth 850. We're talking about their stock portfolio. And what are those investors going to do? Well, I'll tell you what they're going to do. They're not going to do the renovation on the house. They're not going to go on the holiday to Disneyland. They're not going to spend on that new piece of furniture. They're not going to buy consumer discretionary items. They're going to pull their horns in, and they're going to shop cautiously, and they're going to slow their spending. And this is going to happen across millions and millions and millions of Americans over the coming months and quarters ahead. And in my view, the market wanted some certainty from yesterday's event on the White House, and it absolutely got that certainty. And that certainty is that US consumers and businesses are now more worried than ever. That's the certainty that the market got, investors got. So what do you do? What do I do? What do investors do? Well, I've been saying it all the way through this year, and I started saying it in November and December last year. I've been saying it repeatedly. There are going to be some great quality businesses that will be cheap, and there are right now, but you have to have your focus 3 to 5 years down the track. If your focus on your portfolio is what the valuation might be in 12 or 18 months, and you can't bear to see your money mature and grow over 3 to 5 years, then the stock market is not the place for you. But those investors that can, as we do here at Trading Mastery, put our focus 3 to 5 years into the future, we're going to do just fine. And we're going to continue to buy shares in high quality businesses that will endure and grow and thrive over time, global growth companies, golden triangle businesses, and great quality companies will be worth meaningfully more in time. Some pricing levels that I want to buy shares at have been hit. And those of you that are our clients at Trading Mastery know those levels. And I will talk more about that in Chew the Fat today. But what you can't afford to do is you can't afford to panic sell. What is the most logical thing to do is to make sure that you look at things over a 3 to 5 year period the money that you have invested or are about to invest goes into extremely high quality companies that have cash flows and can withstand these tariffs for a period of time before they come down or off and will thrive over time. And I believe my portfolio and what we talk about here at Trading Mastery with our Golden Triangle companies will do just fine. But if you get caught up in the short term, that is going to be your downfall as an investor. So it is going to be the American workers and American businesses that bear the cost of the tariffs. And I want to quote you some stats here today to help you appreciate what has been going on and what is likely going to go on. The total amount of tariffs in the United States collected in the last 12 months was only $77 billion. Now, what the administration is saying is we're going to, with these tariffs, we're going to be able to collect $600, $700 billion and help stabilize the debt, balance the budget, and be able to bring all those good things back into line. Absolute garbage. Because the tariffs, what is going to happen is the imports that they are basing those numbers on, because of the heavy tariffs, the US is not going to have the same level of imports. Imports are going to fall with higher tariffs. And the tariff announced yesterday are heavier than the tariffs that were announced in the 1930s by under President Hoover. You know, the economy in the US was already slowing and trying to now reverse globalization that has been going on for over 75 years and just flick a switch and reverse globalization and go into this protectionism mode in the United States and think, well, we can survive without the rest of the world and it doesn't matter what we do. We can put heavy tariffs in place and everyone's going to come begging to us in the US is just absurd. Millions of Americans in the coming weeks and months and quarters are going to lose their jobs. 70% of the US economy is driven by the US consumer, who's now going to slow their spending. CEOs and CFOs are going to be having really difficult conversations right now around how they navigate their way through this period. And many of them don't have the margins to absorb the tariffs, and they're just going to raise their prices, and consumers won't pay for overpriced goods. I mean, there was one US business owner I listened to today on CNBC who makes deck chairs, baskets, ceramic plates, items that are $25 to $35. And he rightly says, who in their right mind is going to set up a factory in the United States to make these items? My business, everything comes from Vietnam and Bangladesh. And I was encouraged under the previous administration and the one before that to move my manufacturing out of China into those countries. I am going to go broke. My family business has been in business for 80 years, is going to go broke. So this is going to be replicated dozens, hundreds of times across the US while these tariffs are in play at the moment. And if the tariffs stay where they are, I'll repeat it again, the US is going to have a recession. And you are seeing that recession priced into the stock market right now. It then becomes a question of how deep and how long that recession lasts for. History tells us they don't last very long. But what we're going to have to see is we are right now in year one of a presidential term of 4 years. And right now we're seeing a president who's not going to Congress to get legislation passed. He's just, with a stroke of a pen, essentially destroying trillions of dollars of wealth in the hope that countries are going to come cap in hand and say, okay, we'll lower our tariffs. Can you please lower yours against ours? It will be a minimum 6 to 12 months before the US can get out of this mess, even if it started to try and unravel the mess today. And the data will be challenging to read, particularly retail spending, because here's what's going to happen, right? Here is what is happening right now at Walmart, Costco, Target, all of these types of stores across the United States. And if you're watching this in the US, tell me I'm wrong. People are going there right now and shopping, and they are buying big grocery loads, big shopping trolley loads of goods because they want to buy those before the tariffs actually start to take effect. Now, I know this to be fact because I'm seeing it every day as I'm watching the news, as people are being interviewed, as they're coming out of Walmart, Costco, Target, etc. And all of this is happening because people want to pull forward their purchases before higher prices. All of this also at a time where the US has $37 trillion of debt to service. And how's this? Government spending in the first 3 months of this year went up by 7%. So the debt is getting bigger, and the administration is no hope of balancing the budget or stabilizing the debt within an economy that is slowing, and tax revenues are going to decline. You know, I've been a massive fan and a big advocate, as all of you know that following me here, of US exceptionalism. But the US cannot continue to excel with these policies. It will fall further and further behind and will distance itself further and further from the rest of the world. You know, the world right now is turning against the US, and Trump has now put in place protectionist policies from the 1930s that failed dismally. He's right now seeing the immediate consequences, and sadly, Americans will experience the long-term consequences over the coming years if things don't change. Now, history says his policies are not going to work. Some people say it's a negotiating tactic. Okay, I accept that. But what about if you're wrong? What about those of you that say it's a negotiating tactic? And what about if you're wrong? What are the consequences if he hangs in there and digs his heels in? What are the consequences? They are really, really severe. Do you want to bet on something that has a probability in the past of showing a dismal failure? That is what they're doing right now. And we're going to see retaliatory tariffs come on from other countries over the next days and weeks ahead. Now, Donald Trump left the White House this afternoon, Thursday afternoon. It's Friday morning where I'm recording this video now, on his way down to Mar-a-Lago for a golf event at Doral Golf Course down in Miami. And I quote, this is what he said: "The market is going to boom and the economy is going to boom." And at the same time he was standing there, in the background, his trade advisor, Pete Navarro, was speaking on CNBC and said, and I quote, "The tariffs are not negotiable." But yet, 1 hour later, on Air Force One, speaking to the press, as he often does, opens that door and talks to them towards the back, at the back end of the plane, "I'm open to negotiate on the tariffs if we get a phenomenal deal." So Navarro says the tariff numbers were calculated by the Council of Economic Advisors, and in his words, using very, very well-established methodologies from international trade economic literature. That is an absolute lie and flat out not true. Navarro has just simply told nonsense. And the Trump administration led all of us, Wall Street investors around the world, to believe that the tariffs were going to be tit for tat. You've got 5-10% on us, we're going to put 5 or 10% on you. The tariff announcement program yesterday announced was nothing like that. How they came up with the numbers is anyone's guess. And some of you may have seen that mathematical equation flashed up on the internet and in the press. I mean, it's just fanciful. What happens when tariff and tax are put on imports? Imports fall. So this notion about higher income for the US government, it's not going to happen. So guys, in a nutshell, if things don't change, the unemployment rate in the US is going to go up. It's going to go up irrespective of what happens now. The economy is going to continue to slow. Company profits are going to decline, and the stock market is going to continue to weaken further in the short to medium term. The silver lining is that valuations of great quality companies will rise over time, but you have to have a focus of 3 to 5 years and not 12 to 18 months. Gone are the days of just throwing your money into US businesses and 15, 20, 25% returns. They're history. Gone. Get invested, stay invested, and keep investing in golden triangle businesses. And over the coming weeks and months and quarters ahead, I'll lead by example. I'll be buying some more shares next week, and we will continue to follow the same path we have for the last 5 years during the pandemic, during the interest rate increases in 2022, where the S&P 500 was down more than 20%. It's only down a little more than 10 right now. And we will profit and thrive and make a lot of money as we have in the last 3 years, and we'll do the same over the next coming 3 to 5 years. But I've got to get your focus on the longer term, and you have to understand what's going on, accept it, accept what is happening in the US, accept the policies that are in place, understand why people are behaving the way they are and the probability of things panning out, but understand human economic output will be slowed, it won't be stopped, and great quality businesses will be worth a lot more in the future. Have a great Friday. I'll see you for Chew the Fat this afternoon at 4 o'clock. Bring along your questions, those of you who are clients, and I'll see you then.